Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, there is no real progress in either the US-China trade talks nor the Brexit negotiations. But there has been a major miss in the US non-farm payrolls report for February. Analysts were expecting a 180,000 rise, which would have been a modest following January's strong 300,000 showing. But the gain was only 20,000. Markets rumbled. It is true that their unemployment rate dipped lower to 3.8%, but that was only because their participation rate turned worse. And don't forget, this month those federal workers returned to work after the shutdown, so that should have boosted the jobs gain. But firms in the parcel delivery sector, for example, slashed tens of thousands of jobs in the month. Cutting low-wage jobs aggressively has brought a rise in average pay. Year-on-year, average hourly earnings rose 3.4%. This jobs fail will make the US Fed even more patient. The jobs fail is just an American thing, though. Across the border, Canada reported good gain of 56,000 jobs in February, which was much better than expected. But almost all of those were in Ontario. Japan has turned in a fourth quarter 2018 growth rate of 1.9%, and that's much better than expected. But China has reported weak exports in February, down 17%, and a trade surplus far lower than expected, was almost in balance. And also falling in China are price rises. Consumer prices rose 1.5% in the year to February as expected, but this was their slowest pace in more than a year. Falling food prices are the driver here. Meanwhile, debt growth in China is also slowing fast. Recall that the rise in January was a spectacular increase of $1 trillion. But in February, the growth was only $15 billion, and actually less than the same month a year ago. In Australia, their May general election edges closer, and the latest opinion poll shows the opposition ALP has a solid and sticky lead over the government coalition. The implications for New Zealand may not be positive if the Australian Labor Party institutes its stronger union preference policies. US Treasury 10-year yield has fallen today and now at 2.63%. That's a 12 basis points drop in a week. Their 210 curve is down to just 16 basis points, while their negative 1.5 curve has returned. The New Zealand 10-year swap rates are now at record lows. Gold is up sharply, up to $1,298 an ounce, and a $13 rise since this time last Friday. However, it is only back to where it was at the start of the week. US oil prices are now just over $56 a barrel, while the Brent benchmark is just under $66 a barrel. That's a small rise from Saturday. And the Kiwi dollar is at 68 US cents and little changed. On the cross rates, though, we have gained on the Aussie and now at 96.6 Aussie cents, which is the highest level since September 2016. Against the euro, we're up to 60.6 euro cents. That puts the TWI notice firma at 72.9. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.